All right, time for the great tax debate, and let's get right into it. Occidental College Professor Carolyn Heldman and former Reagan economic advisor Art Laffer, both here. All right, first to you, Carolyn, if I may. Back up your statement earlier on this show that the top tax rate should be 83%. Repeat it and back it up, please. You've got 30 seconds.
Well, I would say that from the 1940s to the 1980s, we had tax rates above 70% on the very wealthiest, over $400,000. That's what we're talking about, not the overall tax rate, but the tax rate on the top 1% above $400,000. And it paid for roads and education and our social safety net. And what we have done now since the 80s is cut that rate as a result of Mr. Laffer's policies. And that has squeezed the middle class. It has given us an infrastructure crisis, and our social safety net has holes all over it. So we need to return to a reasonable, progressive tax rate at the top.
Okay. Art Laffer, your response.
Yeah, I think a lot of people agree with Caroline on this position. But let me just say, 3 days ago, George Osborne, Chancellor of the Exchequer in the UK, front page for London Times, announced that the tax cut from 50% to 45% increased revenues from the top income earners by 80 billion pounds. I mean, 8 billion pounds. That's a huge number there. If you look at the 83%, every time we've raised tax rates on the rich, every time, including the time period that Caroline's talking about, every time we've raised tax rates, revenues from the top 1% of income earners have actually declined as a share of GDP, and we've had a bad economy. And the reason is very simply these people do what Warren Buffett does, is they shelter their income and they don't pay their taxes, or they go offshore, or they leave. But you do get the bad economy. Always you get it. And lastly, we've done the states.
Okay, hold on. I've got to organize this, give some structure. You know how that is. No chatting on top of each other. All right, Carolyn, you said on this program that that kind of top tax rate is the best way to end income inequality. Make that case again, please.
Well, can I just respond to Mr. Laffer's claim that it's somehow tied to GDP? There was a study done by the Congressional Research Service a few years ago, a 65-year study, and found zero correlation between the marginal tax rates and the capital gains tax rates on the wealthiest Americans and GDP. It just does not affect investment.
Okay, hold on
it does not affect
I
savings,
really don't
and
want
it
to
does
get
not
into
affect
study
productivity.
versus study. We're going to go nowhere. We're going to get in the weeds
He
real
didn't
fast.
cite a study. He didn't cite a study. He just cited Reaganomics, which has been debunked.
Carolyn, you're using up your time. Please make your case for that top tax rate at 83% is the best way to reduce income inequality. I'll give you your 30 seconds back. Go.
Good.
Well, economists say that that is absolutely the way to do it. If we want to address the growing gap between the wealthy and what they're paying in taxes and the burden on the middle class, the way we do that is to tax the wealthy at rates that we previously taxed them. I think it's important to note that since the 80s, the middle class has shrunk, wages have stagnated, even though productivity has gone up, at the same time that the wealthiest Americans have doubled their income. This is not fair, it's not meritorious, it doesn't fit the American dream, and we need to get back to a more progressive system of taxation, and the way to do it is to tax the 1%.
Now, Carolyn said economists say. Art, you are an economist. What do you say?
Well, I don't think that's true about inequality. I think the best form of welfare, if I can quote Jack Kennedy on this, is still a good high-paying job. And the real problem with equality in this country is economic growth. And all of the studies that I know of that have done it in the academic journals have found that tax rates are very instrumental in economic growth, just as you'd expect it. If you tax people who work and you pay people who don't work, don't be surprised if you have a lot of people not working and your economy falters. And that's exactly what we've had for the last 14 years in this country. It's not Republican, it's not Democrat, it's not liberal, it's not conservative, it's economics. And when Kennedy cut the tax rates, we had prosperity and the poor did better. And when Clinton did it, we had better economy as well. And when Reagan did it, we had a much better economy as well. It's just straightforward.
Okay, this question goes to you first. What do you think would happen to America's economy if the next president of the United States imposed an 83% top tax rate? You first, Art.
Yeah, I think we would have a very sharp decline in output. Not just growth rates would decline, but I think we'd have a very sharp decline in output, much the way we did when we left the Clinton era and coming to here.
Okay, Carolyn, I've got 30 seconds for you to respond to that, and we're over. Go.
I would say that Art Laffer is still peddling voodoo economics 30 years later, even though it's been debunked. And the best data on this subject indicate that indeed it is not correlated with GDP, that we can actually raise it. And in fact, I would go beyond marginal tax rates. I would go into raising our capital gains back to what the previous level. I would raise the inheritance tax back to the previous level. I think the tricky thing about capitalism is it allows wealthy people to establish political rules that benefit them at the expense of other people. It throws merit out the window. The fact that 60% of the Forbes top 400
I do want to
inherited
observe
wealth.
something.
This is not meritorious.
You told us on this program, Carolyn, that you come from a wealthy family. Is that correct?
I come from a family that benefits from all of these tax loopholes. Indeed, I do.
Okay. Art, I think you should respond to that last sentence, voodoo economics. Last word to you.
I don't know what to say about voodoo economics. It works, but I wonder, it's a name that was called me by Bush, by the way. But, this is a serious debate, and whether you come from a rich family or a poor family, you should have to look at the facts either way. And I understand a lot of people do come, like the Kennedys and those from very wealthy, and they didn't like their family, and they did want to change it to not help their families, and that's maybe meritorious. But the facts are you can't tax an economy into prosperity.
All right.
And a poor person
debate.
can't spend himself into wealth.
And, this debate is going to carry forward.
Yes, it will.
All the way through to the election, because this is central to the election. Thank you, both of you. Really good.
Thank
It was
you.
open and overt and good stuff. Thanks, everybody. Now